Hi, everyone. Welcome to our panel discussion on Pakistan and Pakistan's long-term investment potential intact despite a funding slowdown. Our panelists include, we've got Umar Khan from Postex. It's a fintech and logistics company in Pakistan. We've got Misbah from I2I Ventures. She's the general partner at I2I. We've got Halima. She is the founder of Iran, a financial inclusion fintech. And we've got Faisal Aftab, who is the founder of Zane Capital. And I'm so glad that we have all of you guys. Thank you so much for joining. So let's just go right into the discussion. So Pakistan has had a bumper year in 2021. More funding was received in 2021 than previous years combined. So this was backed by changes in regulations, Pakistan emerging in the eyes of investors. The Vapistani factor, where lots of foreign educated, experienced employees were coming back to Pakistan to build. So 2021 proved to be a great year for Pakistan. However, 2022 came in, and not only is there a funding slowdown around the world, but there is a lot of macroeconomic fundamentals in Pakistan at play as well that are hampering the sentiment given the situation. To comment on that, we have you guys. So we're just going to jump into the discussion. So I'm going to start off with Faisal. So Pakistan has received record venture capital funding in 2021, and there's several storied global investors and many first-time investors betted on the region's emerging market for the first time. Now, what is your reading for 2022 and beyond, and how should the overall ecosystem, founders, investors, regulators, how should they all align and just to ensure the country remains an attractive destination for capital, ideas, innovation, and talent? Over to you.
Sure. Thank you for having me. So I think Pakistan it's still an amazing bet, and very bullish on Pakistan on a long-term view. And like all markets and all capital markets, venture capital is linked to interest rates. And given that the Federal Reserve effectively indicated in October of 2021 that their primary concern is inflation, that really, and they're going to start raising rates in 2022. That is primarily what's led to a liquidity squeeze in not just Pakistan, but the entire world. More so in Pakistan, just because it's a more nascent environment. We had a lot of companies that were funded, and some were depending on incremental capital. And so I think that's what's played out in most of 2022. I think 2023 is going to be potentially more painful, not just for Pakistan, for some of the regional tech ecosystem as well, especially for companies that need constant incremental capital and are still struggling to find the base model for their business. Primarily, again, because I think if you look at, and I'll keep going back to the Fed, because we're investing capital, and whatever the Fed does is going to impact every single asset class. So I do believe that the Fed is going to continue to raise aggressively, at least in the September 27th meeting, and potentially one or two more meetings out of that. And that'll result in the Fed funds rate potentially going to about 3.6%. There's usually the 3-month treasury that they're targeting, trying to get that to 4%. Once they get there and leave that rate up there, we're seeing pretty much a risk-off environment that tech hasn't seen since 2008. I'll count 2015 to 2017 partially as when they raised money. But when a risk-on environment is off, when we're in a risk-off environment, it's not good for tech. Historically, low cost of capital is always what subsidized every disruption, whether it was the steam engine or the railroads or Rockefeller's pipelines. But with that said, I'm fairly positive that around tail end of next year, the Fed will start to ease off as the world goes into a recession. And 2024, I'm extremely bullish. So the next 18 months, I think, and I'll let some of the other people speak on this as well, especially because we are founders here. But I really think the focus should be on building a sound business. I think some of the best founders are going to come out of this. They're going to go out and build some of the best companies, because even I would say some of the good founders in the last decade had not gone through a financial crisis. They were post 2008. They were all born out of the after the 2008 financial crisis. So once you go through market cyclicality and interest rate fluctuations and impact of liquidity periods, I think stronger founders will come out that understand that, hey, you ride the waves. When money is available, take that money, use it judiciously and scale aggressively. And when liquidity goes away, you should always have a plan to survive. And that's what creates good business in general, not just founders. So that's my short-term outlook. Ariba, I think you're on mute.
Sorry. And thank you so much, Faisal, and especially because you look at a macro perspective. But Misbah, over to you. How did you see 2021, and how do you and moving forward, how do you see 2022? And what do you tell your portfolio companies?
Yeah, thanks, Ariba, and everyone from D Street Asia for having me, along with these great colleagues and people from our ecosystem. I agree with Faisal. In fact, it's always great coming after Faisal because Faisal is at that very high level macro overview, but obviously all of that trickles down into how each of our individual markets behave. I think Pakistan, like Faisal already said, is no exception. We are, we're seeing a funding crunch. We're seeing and to add on top of the global economic slowdown, we have unique challenges in our country. We've had political instability, and now with the floods and the economic impact of that, and basic economic, the shrinking of the economy and the pressure that's coming in is going to be felt for quite some time. I think for us, definitely 2022 has been tougher than 21 in terms of the heyday that 21 was globally. Pakistan was the same, as you mentioned in your intro. I think 2022 started off with still some funding announcements coming in. A lot of those deals were done or started being done later in 2021. We're still seeing a few come through, but I think it's definitely going to be a slowdown for the rest of the year and well into 23. I am a little more optimistic than Faisal because I think that again, the founders that are building good, strong businesses and that are focusing on addressing a need that exists in the market will continue to thrive. And so if they are thriving, they should be able to attract capital that is comfortable with the risk that Pakistan is now representing. So it may not be everyone's cup of tea, but I do believe that there is going to be possibility of attracting capital for those business models, which are not only addressing a big need, but where the founders are building from a position of strength and really coming in with solid unit economics. And there are those that are in a way present in our market as they are in some others. So I think it's going to continue to be tough for a while. But going back to the topic of our discussion, which says that we have long-term potential despite the slowdown, I agree. I think there's going to be, there will be a bit of a slowdown and it's going to continue for a while, but we'll see strong founders come out stronger after this, and potentially new companies being built, but with a different mindset than a lot of companies that were being built in 21, where money was just being thrown at everybody.
That was great. So we're going to move on to the founders with the same question, but going to change it a bit. And we're going to talk about it in terms of how you see talent coming in into the startup ecosystem as well. So I want a comment on that as well. So keep that in mind. How about we start with Omer first?
Thank you, Riva. So when we talk about young markets like Pakistan, which is where startup ecosystem is still very young and fundraising is still new for founders, from a founder's point of view, I personally believe that all the stakeholders, including the local and global investors, they look at two qualities in a founder, which one is how good they are at raising funds, selling the idea to the merchants, to the talent, to the investors, let it be local or global. And the second one is how good they are at using those funds to build something remarkable, which is a business, not just a startup that is burning, but is actually adding value for the ecosystem. 2021 has been a proof of the fact that we have quality founders. They have been able to raise a massive amount of funds. And now we know that market is going to slow down. There's a market correction, fundraising is going to slow down. But 2022 is where we show the global investors that we have the quality founders who can not just raise funds, but also build businesses. So we as founders have to focus on fundamentals, building strong unit economics around the product and how these products are adding value for the ecosystem or for the stakeholders that are working with us. Let it be talent, let it be merchants, consumer, or the investors. So for us, if we're able to do that, And it's our responsibility to do that right now, to show everybody that we have those both qualities and we are at par with any other market in the world. Money will flow, money will follow. Maybe not as much in 2022, but 2022 is where we build things, and 2023 or 2024, early 2024, is where good from best. This time will differentiate good from best, and then that's where the money will start flowing in.
Thank you for that. Halima, over to you. How do you see the future?
I'm super excited about it. And I think I would echo a lot of things that Misbah, Faisal, and Omar said. Pakistan has a lot of potential. What we saw last year and the year before was, for the first time, Pakistan coming under the radar of these investors. There's a lot of people who have laid the groundwork for us to get there. And when we start seeing the kind of capital we saw, that was an indication that, yes, this market has a lot of potential. We are a large population, but the addressable audience that we want to be able to cater to first before we move down the pyramid where the masses lie needs to be solved for first. What happened, and the kind of investors that were also coming in were strategic institutional capital that came in, who were also aware of what kind of patterns from a funding perspective was coming into play. So when we talk about, from our examples perspective, the investors were very clear that there is going to be a there's going to be a winter that will come in. And if you look at patterns from different markets and try to create that model for Pakistan, you will see that every market has gone through, or every emerging market had gone through these ups and downs. And making those bets in terms of how you craft your business models to make sure that you're getting creative with your capital and not bleeding capital from the get-go is important. I do believe right now that the fundamentals of business is what majority of the founders have gone back to. What are the unit economics looking like? Where are you burning the capital? How are you attracting the talent? What kind of talent do you need? Do you even need the forces that people had hired and had to lay off? So making those strategic decisions and understanding what has happened previously as well in different markets and how this cycle works gives us that capability to predict the future better. And that's why I think all of us sitting on this panel are super bullish in terms of the potential Pakistan holds, especially from a talent perspective, right? We saw an increase in interest from the younger lot to work at startups that we have not seen previously. And that was largely because of, hey, maybe they were getting paid a lot more. But as the pay scales also started getting corrected, these kids started recognizing the importance of compounding of learning and how can they take this opportunity to learn as much as they want and not necessarily go for that really, really high paychecks, but then go on to learn and then go on to build their own company. So we are doing these startups, or the companies that we're building, is also a breeding ground right now for the next set of founders, which I am particularly very excited for, because previously when we're the first generation of true tech founders in Pakistan, right? So we didn't have a lot of precedents that were set for us. A lot of challenges that we are facing were the first-time challenges that we alone had to face. But as these kids and as these talent gets groomed and learn about how to build better companies, the potential that Pakistan has in terms from a tech disruption perspective is massive, and it's a very exciting space to be in.
Thank you for that. So we're going to move on to the next question. And, you spoke about layoffs, we've spoken about like a winter coming. So, there's global macroeconomic uncertainty, there's a tech sell-off, and there's a so-called funding winter. And Pakistan's ecosystem has suffered from setbacks in terms of a capital squeeze. We've seen layoffs and we've seen businesses shutting down as well. So what role do you think investors play in fostering the development of sustainable businesses? How do you think VCs could, or investors could be more hands-on, or boards could be more addressable? What lessons can a nascent entrepreneurial ecosystem learn from other mature markets? So we're just going to address the elephant in the room. All right, let's start off with Faisal.
Yeah, so I think investors, especially in markets like Pakistan, and some of what Halima said as well, is that because a lot of these founders are first-time founders, and they're having to effectively pioneer and go through things. Basic things like, I mean, even if I take like the previous wave of what Baikia and some of these other founders went through, they were allowed to create holdcos abroad, right? And then everybody collectively got together, lobbied for that, brought about that change, and that unlocked a lot of capital. But generally, I think that it's extremely important for funds, venture capital funds, especially the Pakistan-focused ones that have a mandate for Pakistan, to not just write a check and disappear, but actually work with the founders. And and I think all of us here generally, and even the founders can attest that most of their Pakistan investors do work with them very closely. They're at least a soundboard for them. The approach I've had is that, okay, you write a check and then you basically come up with long-term plans. So my thing is that, I'm a long-term view individual. So usually, with post-text, we're discussing things, okay, what is the trajectory in 5 years? And this type of a discussion is happening like every 2 to 3 months. And usually, they're the ones driving all the decision-making and all the ideas. And we're just there as a soundboard to help to guide them in a particular direction. But I'm also very bullish when the bear sentiment comes to market cycles. But at the same time, I'm bullish about the fact that the best companies that come out of the company, everybody that survives and is working hard and builds a good business is going to be the funnel for the next wave of investment that comes in. And these are the founders that everyone's going to bet on. But there's 2024, late 2023. That's speculative, but I know the money's going to come back. But what's key in this is that we might have a short-term shortage of quality new founders in Pakistan, just because the best people that worked at, let's say, the 3 big companies where everybody learned how to scale, whether it was Careem, Food Panda, or the Raz, they went out and created companies in 2021. So I think a lot of us got exposure to very, very strong founders. And even startups hired a lot of the best talent from these companies. But now you're seeing a bit of a period where new individuals that have scaling abilities or know how to scale and understand tech, there's a shortage of those resources. And I think that probably when the second wave comes of funding, a lot of these companies would have gained a sizable mass of market share in Pakistan. And then their co-founders or employees, when they go out and create companies, they'll not only be trained well, they would have seen the problems that you have to go through. And that's what I was saying, that this cycle is actually healthy because it's teaching people that the world is about cycles, and you leverage the good out of each cycle. So I think that's what's very strong about it. One thing I will say is that Pakistan is it was a very overlooked market. I look at Pakistan as a mini India. All the attributes are exactly the same as India. We've got a huge alumni network in Silicon Valley, and the Pakistanis being in fairly senior positions that add value. When you look at finance, hedge funds, private equity, Blackstone, BlackRock, you can find a plethora of partners and hedge fund managers of Pakistani origin. And when I look at some of the other companies, I try to look at some of the other companies in the countries in the region. There really wasn't as much of an alumni network that can could have helped to guide founders. So I think all this is in. So really bullish, and I think the evolution is going to be very nice to watch in Pakistan.
That was really interesting how you brought up Careem Mafia, and we did see somewhat of an airlift mafia form as well. So it's nice to see how these startups are becoming like training grounds for our future entrepreneurs. But over to you, Misbah.
Yeah, thanks. I think similar to what Faisal said, especially for early stage investors, and most of us in Pakistan are early stage investors, even though some of us go up to Series A, it's still very early in the stage of the life cycle of a startup. I think it's very important for us to understand the needs of our founders beyond just writing the check, and really be there for them to support them. Now, that could be in strategy conversations, like Faisal saying, which is a longer term view. It could be in hiring and talent management. It could be bringing resources from our networks, and then also really digging down into areas where we can actually either personally through the team or through our networks offer support and guidance, whether it's looking at paths to product profitability, product market fit, user-centered design, whatever that may be. So we definitely at I2I, take the after doing the deal actually more seriously than in some ways, before the deal is done, because I think there's a big responsibility for us to work with founders and be there for them. I think there is a governance aspect there, which is not much talked about. It should be talked about more in our market. I think we do have a responsibility and a role where we can help. A lot of founders, like we were saying, are first-time founders. They may not understand all the different aspects of the parameters of the legal landscape, for example. So we can actually help bring in value add from that perspective as well, and help hold them accountable in terms of where the money is going, how the money is being spent. But really for us, it's driven by the founders and the founders' needs. Each of our companies is unique and requires a different level of engagement, which we would like to provide. I think it's also important for us in this time to really be there for our companies, for our founders. And honestly, my partner Kulsum and I often joke that we were happy to hold therapist sessions as much as we are talking about business strategy. Sometimes founders just need to know that they're not out there on their own, and there are people that are not going to come back to them and say, you didn't do what you said you were going to do, but really understand the dynamics of what they are working with. So we try to be investors who are there to support our founders, whether it's just a chat about something that is business related or something personal that somebody might be working with. And I think the role for early stage investors in a market like Pakistan has to include support that goes beyond writing the check. So the many different ways as most of us do that. I think to the part about like the responsibility of the LPs, I think it is important for us to raise the flag for Pakistan and to attract money towards our founders and others in the market, because sometimes we can tell a story from a higher level perspective or a more generic perspective where we may not be questioned as much as a potential founder that's out fundraising. So if Omar or Halima were to be talking to a potential investor, that's a pitch. But if Faisal or I are talking about Halima or Omar to a potential investor, not only are we speaking from a place of already having supported them, but we're also talking about selling the Pakistan story to someone that may not have invested. So I think there is a responsibility and an opportunity for investors to help their founders look at that path to fundraising and how we can actually bring in, helping future fundraise opportunities come up for them.
Yeah, no, that was great. So Omer and Halima, again, I'll ask Omer this question again. First, what are the lessons that the past 1 year has taught the nascent ecosystem? So let's go with Omer first, and then Halima.
Thank you, Reba. Obviously, we know there is a market correction, and that market correction is leading to a different mindset for the capital markets. Capital markets are bearish right now. And that mindset is passed on to all let it be investors, let it be startups, founders. It has a different effect on their day-to-day or strategies. It's very important for us founders to be in touch with the investors because they're part of the vision and the strategy that we have. We have to set those strategies as per the understanding of the market and the environment that we are operating in. For us, with something like this comes along, if you go back in 2020 or 2021, the mindset was different. Mindset was more about growth. Mindset was more about achieving as much growth as possible within the less time, burning more funds, and achieving the economies of scale and being more profitable at a higher scale. As compared to now, the mindset has changed. Our focus from that scaling or rapid growth has turned into more profitability. And for that, it's very important for us to have these discussions with the investors who understand those capital markets probably better than us, and use that knowledge to re-strategize our day-to-day operations, our spending, and make the business more viable for the environment that we're operating in. Capital is important for startups. Let it be growth stage startups, let it be pre-seed, seed. But for us as founders, we have to make sure that the fundamentals are strong, unit economics is positive, and then with that unit economics and strong fundamentals, we are able to build strong businesses which can withhold these kind of times, which can pass, survive during these times, so that we have a credible business when we come out of these times, when we come out of bearish markets. And when the markets start to normalize, it's easier for us to go out and scale more rapidly or into the other markets.
Thank you, Halima. Your turn.
I think one of the lessons that we've learned from last year is focus on building the business and not chasing capital. And really understanding what works in a market like Pakistan. Because while we might have comparables to other emerging markets, we have our own very unique set of problems. And a very different infrastructure to build on top of. So really understanding the motivations of the customer that you're solving for, the problem that you're solving for, the market that you're operating in, and the kind of business you want to be able to build. Capital will come if you create value. But if you chase capital and you don't understand the market, and if you don't understand what you want to build for, we will see bigger setbacks happening in the market, right? And as founders as well, there is a lot of noise. So channeling that noise out and really putting your head down and constantly realigning, focusing as the market change, as the customer change, and building for them is what is required. And I think that is working closely with our investors, working closely with our board members to get that alignment and constantly just focusing on the purpose that you started the company for. And that was one of the biggest lessons that I learned, and a couple of other founders that we speak to all align on that there was a lot of noise and we got distracted. We're human beings, we're first-time founders. This is the first wave we saw. So there was a lot of distraction, but I think getting back into just focusing on the basics right now and really, really deeply understanding what the motivation of the customer is. And that's our focus. And I think that's what the focus always should be. And as investors and as stakeholders into these companies, I think that should always be the focus, helping us constantly realign and focus back into the basics of the company is what's required. And I think the other point that Misbah brought up around governance and due diligence, I think it's extremely important to make sure that we are being held accountable for how we're spending money. Again, being first-time founders, there was a lot of distraction. That's the distraction led to hiring of people at ridiculous pay scales because everybody else was doing it. We might or might not need that kind of talent at that point. So really working closely with investors who've seen other markets, who've seen other companies, and taking those learnings and applying into our specific scenarios is also extremely. So I think it's a two-way street. Being able to listen to the stakeholders and applying those strategies into our companies to make sure that we're building for future, not just present, and blitz scaling without really understanding what are we building.
So the next question is primarily for the founders. So Omer and Halima, both of you have a startup that is primarily focused in Pakistan, and it's built for Pakistan. Halima, in your case, it's female financial inclusion primarily, using committees and more. Omer, in your case, it's receivable factoring and along with logistics services. So I just wanted to get a general feel of the challenges you faced while building, fundraising, and how you've scaled up. Like recently, you've also made an announcement where Postix is acquired, called Courier as well. So getting legacy business into it, that would be a really cool way to explain this. So Omer, over to you.
Thank you, Riva. when we look at conventional businesses and when we compare them to startups, we think that they are enemies or they're trying to beat each other, but that's not how it is. If you look at those conventional businesses, they have been operating in the industry, they have the knowledge of that industry. We're new players, we're trying to solve the problems that they've not been able to solve over the period of 10 years, 20 years, 30 years, as long as they have been operating in the industry. For us as startups, it's an opportunity to learn from them and see what are they doing differently than us and what we can do in a better way to solve those problems that are part of that ecosystem. I personally don't think that we have, so one of us is going to survive. Either if the startups win, startups is going to just eliminate the conventional businesses. Let it be a merger or acquisition. It's an opportunity for startups to learn from their experience and use that experience and their inability to grow or solve problems that we are willing to solve problems and work together on those aspects. For us, the acquisition was a very, no-brainer, because we see that they have the understanding of the market. They are a profitable business. They have been operating for 10, 15 years in the same industry that we are trying to solve problems for. And for us, it's very easy to work with a team which is willing to learn, because there are different aspects. Sometimes they're not able to do what we are doing because they have issues around capital. They don't have that kind of capital lying around because these are conventional businesses. They are using their profits to run their business. They don't have that kind of capital to go an extra mile to solve the problems that are part of that same ecosystem, but they understand those problems and they have the open-mindedness to learn and to grow out of that conventional mindset. And this acquisition was very straightforward. It's very simple for us because they have the understanding of the business. They have positive unit economics. We are, as a startup, have always been working on positive unit economics. So the teams merged. It's just like we got an opportunity to have the same kind of minds, people with the same kind of mindset, with the same ambitions, working with us towards the same goal now, with more experience, with better, somehow for some things, better understanding of conventional businesses and the challenges that they face, so that can help us solve those problems at a bigger scale. And trying to fix the problems that conventional business has not been able to do in last 30, 40 years when it comes to logistics or when it comes to conventional banks or access to capital for e-commerce.
Thank you for that. And Halima, Pakistan accounts for around 6% of the world's unbanked population. Female financial inclusion is very limited. And for context, the first form of saving I think my mom probably did was a committee. So it's a very localized idea. So over to you.
Absolutely. For us, it actually started off with a personal experience where I was not able to open up a bank account. I think when we went on ground, what we started recognizing was that while the formal economy is not serving large majority of your population, especially women, how are they behaving, right? Like what is their natural behavior in their own settings? And we found that committees is one of the largest informal financial tool that is used. So taking that tool and digitizing that behavior was the first thing that we did. However, when you're digitizing a behavior, it comes with its own set of challenges, especially when it's catering to an audience that's completely overlooked, not catered to, also not understood in terms of distribution. So the first challenge that we saw was around trust. How do you build a trust for financial products for a community that has never seen any financial product come to them, especially around access to capital? I'm not talking about payments. So the first thing was, how do you build that trust? How do you educate them about what kind of options do they have? How do you give them an experience that's easier for them to understand? How do you build around the languages that they speak? So these were some of the challenges that we faced in our early days. And the biggest learning was the distribution for women. The financial needs of women are not different than any men or any other gender, right? But the distribution of financial products for women has a very different role it plays than it would be for any other gender. And that's really what we had to crack and had to continue struggle around it, because as the customer also gets slightly sophisticated, she wants a little bit more, and she wants something more out of it, because she's not looking finance from just like debit, credit, and payment. She's looking at from a lifestyle perspective. So building around that and building for her natural behavior and digitizing that natural behavior is what we did, and hyper localized the experience around it so that it doesn't feel like an alien concept to her.
Okay, wow, thanks. So now the last question, I'm going to have it for the investors, VCs. So markets like Pakistan are seen as long-term and patient capital play. So how do you investors adjust your risk returns while considering allocations to this market? And what are the concerns of overseas LPs? Like, what questions do you face when they back country-focused funds or global investors who want to back tech startups in Pakistan? So like, what are questions that you face? We'll start with Faisal, then we'll move on to Misbah. Faisal.
Sure, that's actually a great question. So a lot of it really comes down to obviously the currency devaluation volatility, because that, even if you're having hyper growth, ultimately, we're investing in dollars and we expect to exit these companies in dollars. So many times founders are doing well, even if they have significant month-on-month growth, it's getting shaved off by currency volatility. So that's one of the major concerns. The other one is obviously the liquidity or an exit. Where will that come from eventually in the fund? So that's also been a significant concern for investors. And the response is very simple. On the currency devaluation side, ultimately, if you look at Pakistan, historically, we've had about a 5% devaluation. If you look at the last 3 years prior to, let's say the cutoff would be the 2017 rate cycle. Since then, we've had about a 6 to 7% annualized devaluation. We priced in roughly a 10% annual devaluation in the currency going forward for the rest of this decade. Okay, but let's look at the market, right? It's about barely less than 1% e-commerce penetration in the country. By 2030, you're looking at least a 10x in just e-commerce penetration in Pakistan. So you're shaving off roughly 10% off the IRR in terms of devaluation. So that's not so bad, because the return potential is so astronomical that if you make the right bets, you will get the returns for investors. On the exit front, again, for me, it's very simple. Pakistan's a geopolitical country, so it really comes down to the alignment of where the capital flow is going to come from. We're a bit of a misfit. So you have the Southeast Asian bloc. India is big enough to be on its own. In an ideal world, South Asia should have been a capital bloc where funds were raised for South Asia, and they're deploying in all the ecosystems. And then you've obviously got MENA. In this geopolitical alignment, whether it's that Central Asian bloc under the China and Russian tutelage, or if it's MENA, Pakistan effectively, looks like we're going towards that bloc. That will result in basically regional growth by acquisition, which is going to be, in my opinion, the first wave of exits and liquidity events in Pakistan. And then subsequently, you're going to start to see listings. Now, whether that ends up happening on some sort of, a listing, stock exchange listing on the Dubai Stock Exchange. I'm just obviously speculating on where things will happen as evolution takes place, but that is going to be a future prospect. Could be in the form of portfolio listings, happening in the form of ETFs, even taking exposure to different regions and listing them abroad. So there's lots of ways that will happen through an evolution process. No market, as you go through your waves, has an immediate exit. You have to first build, you have to scale, and that's why all of us are betting on this market today, because that's where the opportunity lies. By the time you're having significant exits, most of the value has already been extracted from the system. So I think those are two of the biggest concerns. Political instability is a concern. You can historically go back and trace Pakistan. I do that in my deck. My decks are very weird investment decks. When I go to investors, I have literally traced every single time there's been instability in Pakistan. And it always comes down to a credit contraction in the reserve central bank markets, like the US Fed raising rates and some sort of economic crisis, because it impacts countries like Pakistan more severely. So, we've seen these things come before. I think we have stability around the corner next year or so, and everything stabilizes, and then you have the next pump. So I wouldn't want to miss out that pump.
Faisal, always accurate with the macro foresights. Misbah, over to you.
Yeah, I think I'll add to what Faisal said. Obviously, we also get asked a lot about exits, and devaluation is a big concern. And like Faisal said, I think both of those have answers that can come in, looking at large markets where the growth is going to be so high that any kind of negative impact of deval will actually be surpassed and countered. And again, on the exit side, a lot of strategic acquisitions, especially from the region, as well as potentially even within the country. I think building on that, there are a couple of other things which we also do get asked, although they're not as significant as these two first main points. One is around political stability. I think it's not stability for the sake of stability, but it's also people trying to understand, if the government changes, will they change up the rules? Will suddenly money not be allowed to leave the country? Will holdcos not be allowed to be set up outside? What if suddenly there's a crackdown? I mean, India did this with banned Chinese apps in the country. So China banned edtech companies from making money. So there are concerns around, like, okay, if there isn't a long-term political stable outlook, what impact will it have on a very nascent ecosystem? And so that one of the other things that comes up is around founder quality and ethics. I think this is something that, interestingly enough, often gets asked a lot more by diaspora than by people that have not had any engagement or contact with Pakistan. I think a lot of diaspora left the country at a time where they were potentially disillusioned, or they've now built their careers outside the country, and they think Pakistan is like a potential, not everybody, but some people feel like it's there are question marks around ethics and founder quality. That is a question that comes up at times. Obviously, we are in this in the long run, and we want to build relationships with founders that are not only driven by the same values that we are, but are also going to be able to adhere to good governance practices. So those are some of the things that come up from LPs. I think being singly focused in a geography like Pakistan can get challenging sometimes because there's no counter. For regional funds, there's sometimes a counter in terms of different markets doing relatively better or worse. I think in terms of, sorry, what was the second part of the question?
So the second part of the question was basically, how do investors adjust their risk returns while considering adequate?
Right. So I think I agree with Faisal that there are a lot of patterns that we see in terms of India. I think also markets being very similar. Obviously there's a discount rate that we use to those comparables for Pakistan. I think there is, it's good to see that the kind of valuations we were seeing in 2021, with it being a founder's market and a lot of money chasing a few deals, but also some funds that are not really focused on Pakistan doing opportunistic checks, that kind of changed the market dynamics a little bit in terms of where those numbers were coming in. And I think this year there's more of an opportunity to step back and say, what is the real risk-adjusted valuation that we should be looking at for a particular company? And obviously we then we just pull in that consideration into it. But like all of us have been saying earlier, this is a time for founders to sink their heels in, dig in, and actually build. And I think for those founders that are doing that, there will be obviously a little bit of risk adjustment at the macro level, but I think all of us will be able to see the potential of these businesses in Pakistan going forward.
And a great point, bringing up the political instability and the impact on the ecosystem as well. So thank you so much, Misbah. And thank you everyone for joining us. Thank you, Faisal. Thank you, Misbah. Thank you, Umar. Thank you, Halima. Thank you for taking out time for this. And for our viewers, I hope you guys enjoyed the Asia PE VC Summit in Singapore and you're enjoying the session as well. If you have any questions on Pakistan, these 4 people are great points of contacts as well. and you can always reach out to me as well. But thank you so much, everyone, for joining in. Thank you so much for speaking and for your insights. This was actually a really interesting session, especially considering how Pakistan is too big of a market to ignore. It is more than just 220 million people. It is beyond that. It is a vibrant market. It's filled with interesting people that make up the ecosystem. So thank you so much.